Most Belgian investors are about to make a costly mistake this year. They are going to stay opted in for the new capital gains tax instead of opting out. The result? Their money will sit with the Belgian government for up to 2 years, earning zero interest. Let me explain why and how to avoid it. But what is this tax? Well, everyone knows the top, the stock exchange tax, but since January 2026, Belgium has introduced a new tax, the capital gains tax. It applies to most financial assets, stocks, ETFs, bonds, funds, crypto, so if you invest, you're affected. Quick but important note, the tax only applies to gains made from January 1st, 2026 onwards. Everything you gain before that is exempt. Let me give you an example. Let's say you've bought a stock at 100 euros on January 13th, 2026, and you want to sell it today at 120 euros. That means you've made a capital gain of 20 euros. And you are going to be taxed 10% on those 20 euros, so that's 2 euros. But there is an annual exemption of 10,000 euros in capital gains per person, so you can realize 10,000 euros in gains without paying a cent. But here's where it gets tricky. Before May 31st, 2026, you'll need to make a choice with your bank or broker, opt-in or opt-out, and 95% of people watching this video should choose opt-out. Here's why. Opt-in, that's the default. In opt-in, the bank withholds the tax directly at the source when you sell. Same example as before. You bought a stock at 100 euros, you sell it today at 120 euros, so the bank keeps 2 euros and sends it to the government immediately. The trap is that the bank withholds on every gain, ignoring your 10,000 euros exemption. To get back what you overpaid, you'll need to claim it on your tax return, so you can get up to 1,000 euros of refund, which is 10% of the 10,000 euros capital gain exemption. But before you claim it and get reimbursed, your money sits with the government instead of staying invested and compounding. And recovery time goes from 6 months to 2 years, depending on when you sell during the year and how fast the fiscal administration reimburses you. Then there is opt-out, which I believe is the right choice for 95% of people. With opt-out, the bank withholds nothing. You declare yourself. You report your net capital gain on your tax return and check the exemption box. If the net gain is below 10,000 euros, there's zero tax. If the net gain is above 10,000 euros, you only pay the 10% tax on what exceeds those 10,000 euros. So let's say the net gain is 10,500 euros. You pay 10% tax on 500 euros, which results in a 50 euro tax. So let's compare opt-out and opt-in. With opt-out, you pay 50 euro tax and only those 50 euro tax leave your account. While with opt-in, 1,050 euros leave your account and you later have to claim the 1,000 euros you've overpaid. And these 1,000 euros will have left your account for 6 months to 2 years without being invested. To recap, with opt-in, the bank withholds the tax at source and you wait between 6 months and 2 years to get back what was exempt. With opt-out, nothing is withheld. You declare yourself and you only pay on whatever exceeds 10,000 euros. But hold on, I said opt-out is the right choice for 95% of people, not 100%. Indeed, there are 2 cases where opt-in actually makes more sense and one trap that can push you from 10% to 33% tax. So stay with me. Exception number 1, you are flagged as a trader. If the Belgian tax authority considers your activity as abnormal management of private wealth, you lose your 10,000 euro exemption and you jump from 10% to 33% tax. But who is concerned? It's if you do active trading, if you use leverage, or if you do high frequency and volume in your trades. For a long-term investor who does a DCA on ETFs or buy and hold stocks for a long time, opt-out remains the best choice. The second exception is if you want discretion. With opt-out, your tax return contains more details about your transactions, while with opt-in, the government receives the tax without granular details. If you care about this kind of discretion, you already know it. But for 95% of people, including myself, this does not matter. If you have questions or anything wasn't clear, feel free to drop them in the comments. I answer everything. And if this video helped and you want to keep learning about investing, you can drop a like and follow my channel. Soon I'll publish a video on how I personally invest as someone working in finance. Quick reminder, I am not a financial advisor. The information shared in this video is for educational purposes only and does not constitute personalized financial advice. See ya!